Yo, what is going on, guys? Welcome back to the Quarterly Theory Bootcamp, episode 4. Today's topic is the true change in the state of delivery, also known as a tCISD. Now, this is a concept that I founded myself. It is based upon multiple other teachings from other people, of course, but the framework that I use for it is specifically made by me. So it is, of course, based upon the change in the state of delivery, a concept taught by ICT. That is where it originated from. So that's where the idea comes from. But then I added my own twist using quarterly theory. And then basically we look for the specific tCISD after something occurs, a quarterly theory concept occurs basically. So I'll break it down. And what it's used for is to confirm sequential SMT. So first episode, we learned about the time cycles and quarters. Then I taught you guys about the true opens, which, those are used to filter low probability and high probability quarters and cycles. And then I taught you guys about sequential SMT, which is then used to filter and, confirm high probability quarters as manipulation, when to expect distribution, etc., etc. And now the true change in the state of delivery is a concept that we use to confirm sequential SMT. So sequential SMT confirms manipulation, and then a true change in the state of delivery confirms the sequential SMT. So yeah, this is how we actually use, we use this to enter. This is an actual entry technique. So I'll be breaking it down for you guys. And this is a very, very important video because a lot of you guys only know the framework so far and don't actually know how to enter or trust a sequential SMT. And this video is going to show you exactly how to do that. So firstly, let me go ahead and show you guys an example of a change in the state of delivery. So this is taught by ICT. And here is essentially what it is, okay? So pretend this is the markets, we're looking at a chart right now. This is what's called well, first of all, liquidity has to be taken, okay? So some form of liquidity has to be taken. And then there's two different ways that you can enter a trade. You can either wait for a market structure shift, which is a closure. Oops, that is the wrong thing. Which is a closure above that most recent swing high before the liquidity was taken. So as you can see, price displaces and aggressively closes above the most recent swing high before liquidity was taken. And then what you want to go ahead and do is wait for price to come back in to that market structure shift, that leg higher, the displacement leg, and then you look for your entry around here, okay? Now, you can enter that way. However, the risk to reward, as you can see, is going to be a lot lower. As you can't see actually because it's not letting me place it for some reason. But you guys get the point. Your stop loss would be down here. Your entry would be here essentially, okay? So then by this point, you'd be at like a 1-to-1 RR, which nothing wrong with that. But for the best entries possible, the sniper entries, you want to be using a change in the state of delivery. Now, what is a change in the state of delivery? So again, liquidity must get taken. Liquidity must always get taken before you take a trade. I mean, you guys should know that by now, right? So here is where our market structure shift would be over here, right? So instead of us having to wait for price to close above that most recent swing high and getting that worse RR, we can actually get in down here before the market structure even occurs, basically, right? And the way we're going to go ahead and do that is the candle or the series of candles that take liquidity. We're going to go ahead and wait for price to close above those specific candles, and more specifically, the body of those candles as well, okay? So imagine this is a candle right here that's taking liquidity. We're then going to go ahead and wait for, 1 or 2 candle closures above that specific singular candle. And then that is what's classified as our change in the state of delivery. So the series of down closed candles that take liquidity, they get close above. And then once it's close above, that validates the change in the state of delivery. And then you can literally go ahead and just enter at the change in the state of delivery. So, once price retests it slightly, the candle, you can go ahead and enter there. Stop would then go on the low of that most recent low that took liquidity. And then you can go ahead and target much higher. So you'd be entering here. Stop loss down here. Oops. And then you can see the RR would just be so much higher than this one here. Stop loss there. Entry there, okay? Look how much smaller that entry is. So yeah, obviously there are times and places when you should be using this, and that's what we're going to dive into within this video. And this is just a change in the state of delivery. The one that I'm teaching is a true change in the state of delivery, which is so much more powerful and is very mechanical as well in order, what to actually look for before taking that entry. So now you guys know what a change in the state of delivery is. let's go ahead and go over firstly the time frame alignment, because you must be on specific cycles, specific time frames to look for the tCISD, right? So as always, all of the cycles are still the same, all of the time frames are still the same. So, you know, the monthly time frame for the quadrennial, yearly for the weekly, etc., etc. Okay. So now a true change in the state of delivery can only occur if a sequential SMT occurs. Okay. So let's say we've got a quadrennial cycle sequential SMT occurring, right? So on the monthly time frame, we can see sequential SMT between 2 consecutive years, because that is what a quadrennial cycle SMT is. Once that sequential SMT takes place, so let's say we're in 2025, we run below 2024's low. We then have our sequential SMT, if of course a closely correlated asset hasn't run below its previous year low, creating that value swing, therefore the sequential SMT is there. Once that has formed, what we're going to be then looking for is on the same specific time frame as the sequential SMT, as the cycle that we're viewing, we're looking for our tCISD. So don't drop down one time frame lower, 2 time frames lower, don't go higher. Stay on the same specific time frame the sequential SMT has taken place on. Then that's when we'll find our tCISD. Now, a tCISD is a candle closure above or below, in a bearish scenario, the very, very first candle which created sequential SMT. Okay, so that may sound a little bit confusing. We'll go into some examples shortly, but let's just go over the time frame alignment first. But now you guys know what it actually is. This is why we must be on the same specific time frame. So yearly cycle is a yearly cycle sequential SMT, which is on the weekly time frame, and then that same specific time frame, a 1 week tCISD. Quarterly cycle is a daily tCISD. Monthly cycle is a 4-hour tCISD. Weekly cycle is a 1-hour tCISD. Daily 15-minute tCISD. 95-minute micro 1 minute. Okay, so essentially we're staying on the same cycle, the same time frame the whole entire time, and then we're looking for the tCISD on that same specific time frame. Okay, so let's say daily cycle sequential SMT. So London runs below Asia low, for example. That's Q1, Q2 sequential SMT, and then that's viewed on the 15-minute time frame. And then that very first 15-minute candle that ran below the previous quarter low, we've got our eyes only on that candle, not the candle below that. If we print another candle, not the one above that specific candle, then we wait for price to close above it to validate it. So let me show you guys an example right here. This is just one final little mock-up example, and then we'll jump into some charts. And there's lots of little tips as well in order to find higher probability ones, which ones to trust, when not to trust it, etc., which I'll be telling you guys when we do jump onto the chart shortly. Okay, so here's one final example. Remember, a sequential SMT must take place, so an SMT between 2 consecutive quarters. If you don't know what sequential SMT is, go watch is it the previous video? Yeah, the previous video, the Bootcamp episode number 3. That is where I explained sequential SMT. So SMT between 2 consecutive quarters. Just imagine the closely correlated asset hasn't ran below Q2's low. So we got that value swing. Therefore, we do have a sequential SMT. So that's step number 1. Sequential SMT must occur. Let's say this is the 5-minute time frame, so a 90-minute cycle. We're staying on the 5-minute time frame, the same, very time frame that the sequential SMT took place on. Then, to make it easier, you can literally mark out a line of the previous quarter low and look which candle ran below that low. So, is it this candle here? No. Is it this one? No. Was it this one here? This one right in the middle here? No. Was it this one here? No. None of those. Which one ran below the low? The first very time. This one here. Okay, this very candle here ran below the low. That was the very first candle that ran below it. Okay, so we don't care about any other candle. And also the change in the state of delivery example that I showed you at the start was, remember, the series of down close candles. This is what makes a tCISD so special, because it's a lot more mechanical and you can get a lot better entries. So sequential SMT, candle that took the low, previous quarter low, creating the sequential SMT, this one. Then what we do to validate it, because it doesn't just automatically become an entry point, we then need to see price close above it in a bullish example. Okay, so we took the low, we wait for price to close above the open. So mark out the open of the candle that created sequential SMT, wait for price to close above the open with a body, right? So as you can see, this candle here closed above the open of this candle because it was a bearish candle. You can see, you can mark out the open, which is at the top for a bearish candle. Price closes above it. Then what do we do? Well, now it's valid. there's two things that we can do, okay? If we form a gap slightly above the tCISD, so like here, for example, you can enter from that gap, or you can enter directly off the retest of the tCISD, okay? So this candle, you can literally go ahead and mark this whole entire candle out if you would like to, or you can just mark out the open, whatever you would like to do. Look when we tag back into it, okay? Tag back into it right there. And this other candle here, 1, 2. Those are your entry points. Stop goes on the sequential SMT low, the invalidation. If you miss this first entry, you can look for a second entry at the gap slightly above it, okay? So a couple more things to note is when looking at a bullish tCISD, we of course must have a bullish sequential SMT take place, and the candle that creates sequential SMT must close bearish, okay? Because we can't have it, because basically bearish candles support price to go higher, bullish candles support price to go lower. So this is why the candle that creates sequential SMT must close bearish. If it does, cool, mark out the open, wait for a closure above, wait for the retest, like in this example right here. But if the specific candle, which is very rare by the way, because price runs lower, you know, it's running lower to take liquidity, so it's more likely to close bearish. If it closes bullish for whatever reason, don't worry. What we do then is look to our left. So look at the most recent printed candles before the sequential SMT. So let's say this candle here closed bullish, right? Let me delete this, sorry. So this candle, let's say it closed bullish, but the sequential SMT is there. So now our tCISD becomes the most recent bearish candle to our left. So let's say this is bullish, which is our most recent bearish candle. Let's say this one here was bearish, okay? So then this becomes our tCISD. So then what do? Again, same as before, we wait for a closure above it, which happens here, okay? This candle here closes above. Then what do? Wait for a retest of the tCISD. 1, 2, candles tag into it. Stop again goes on the sequential SMT low, and then you can enter off this gap as well if you missed the first entry, and then target some buy side liquidity or wherever the higher time frame is heading towards, right? So hopefully that makes sense. Let me give a quick rundown for a bearish example. So a bearish sequential SMT, exact same principles. We must see a bullish candle that creates sequential SMT. Closure below it is our, it forms our bearish tCISD candle. Or if the candle that creates bearish sequential SMT closes bearish, look to our left, mark out the most recent bullish candle, the open of it, wait for price to close below that, and then boom, we have our tCISD valid, wait for a retest, stop on the sequential SMT high, and then run it down lower, okay? So that in turn is a very basic understanding of a tCISD, a true chain in the state of delivery. It confirms sequential SMT. Sequential SMT confirms our quarter as manipulation, reversal, continuation, everything. And then the tCISD confirms the sequential SMT. Then we can be confident at taking an entry after that, right? So hopefully that is useful for you guys. Hopefully it makes sense. If not, do not worry. We'll jump into a couple chart examples right now. So I'll see you guys on the charts very shortly. All right, guys, so we're now inside of the charts. We're looking at NQ and ES, and we're going to be pulling up YM shortly as well, because remember, sequential SMT can be looked at through the whole entire triad. So yeah, I'm going to be showing you guys examples from all assets and also not cherry picking any specific examples. We're going to scroll through the charts together and literally show you guys every single setup that you could have taken using the tCISD entry, okay? So you're probably wondering first, how do I have the tCISDs marked on the chart for me? Well, not only do we have a quarterly theory indicator, but we've got a tCISD indicator as well, which will be linked below in the description down below. You can also pick up free 3-day trials for each of the indicators if you want to test them out before making that monthly payment. It's not much anyway, but yeah, link below in the description. As you can see here, my tCISD indicator, you can set the filters and whatnot as well. For me, I just leave everything on default because I know when to trust the tCISD anyway, okay? So yeah, firstly, run the 15-minute chart, which is for the daily cycle. So we're going to be combining both my indicators here. You don't need the indicators, but you can see it just makes my life so much easier. It just marks everything out for me. So right here, you can see we've got a sequential SMT using YM. So this is Q4, Q1. So we go ahead and open up YM. You will see that it created a value swing on Q4's high. So let's take a look. Where is it? Over here. Okay, there we go. So Q4's high was not ran on YM, as you can see, we create that failure swing, and remember that's step number 1. So step number 1, sequential SMT takes place. Now, what do we do? Remember, the very first candle that creates sequential SMT becomes our tCISD candle. So we can mark out the previous quarter high, which candle ran above the high first, okay? So let's take a look at ES as well, because it's any asset that runs above it, right? So if ES runs above it first, we use that candle on NQ. If NQ runs above it, we can use the NQ candle on ES as well. I'm going to be giving you guys a few little tips here as well, because there are some things to know. You know, it's not super straightforward straight away. So which candle ran above Q4's high? Well, it was this one here, okay? 615. But remember, in a bearish sequential SMT example, the candle must be bullish. Our tCISD candle has to be a bullish candle. So remember, what do? Well, we don't use that candle. So we look to our left and use the most recent bullish candle, okay? As you can see, go ahead, mark out the open. Remember, mark out the open of that candle. Wait for price to close below it to validate it. As you can see here, at 9 p.m., it validates the tCISD. And then, yes, you can enter within the following quarter, even if the tCISD is confirmed within the previous quarter. So in this case, sequential SMT takes place during Q1. tCISD takes place during Q1. We don't actually retest it during Q1. We retest it during Q2, and then we get a move lower. Because remember, if we tie everything together, we've got not only the true open here of Q2, we had manipulation during Q1. Q2 ran above the true open, so it's still manipulated above the true open. And I mean, I'm guessing there's probably still some lower time frame sequential SMT up here as well. And then, because Q1 manipulated, we're anticipating Q2 to distribute, okay? The following quarter to distribute. So not only does it open up high, retraces back to the tCISD of the manipulation quarter, then it begins the distribution, and then the following quarter, Q3, we get that continuation lower as well, right? So can you guys see now how we're tying everything together? But yeah, that's something to note. So you can use tCISDs from the previous quarter. You can even use them from like quite some while ago, like 2 quarters, 3 quarters ago. The only time that I recommend that though is if we get a lower time frame sequential SMT inside of it, or if the higher time frame draw liquidity hasn't been met. So let's say, for example, we got a tag into the tCISD and then a huge move lower. Let's say the higher time frame draw was met down here, and then if you see price coming back into the tCISD, I wouldn't then be like, okay, we got a tCISD, now I'm going to enter. You can see that it does work, because look, I mean, look at the rejection from that. That's just insane, right? I mean, even here as well, this is not proving my point whatsoever. This is just showing how powerful it really is. I mean, that's just crazy. But remember, if it comes back into it, we can look for a lower time frame sequential SMT, which we get there. We get a tCISD entry again. Another one here, tCISD entry there. So this means the higher time frame draw obviously hasn't been met. So we still retrace back into it, and now we can see it's been met. So if we was to truly come back into it now, then we'd be like, okay, yeah, we're not going to trust it anymore. You know, we're going to look for something else, basically, right? But yeah, that is how you would use it. So let me go ahead and just show you guys now a few more examples. So it works in any cycle, any time frame. And the way that I like to use it is step number 1, identify my daily bias. Step number 2, wait for my specific trading time window, which is 9 to 10:30 a.m. Step number 3, look for a sequential SMT on any cycle from the daily to a 90 to a micro or a nano. Look for a tCISD on that specific time frame, entry at the tCISD, stop on the low, and then trade, take the trade, anticipating where I'm expecting price to go, basically, okay? So let's go over a few more examples for now. So, I mean, it's always there, guys. It has to be there before every single move. A sequential SMT is always there, and then a confirmation of that, obviously a closure below the candle of sequential SMT candle, and then boom, the move starts, right? So, I mean, as you can see here, Q1, Q2 with ES. So ES failed to take out Q1's lows. As you can see right there, created equal lows. So not the best case scenario, but if we do get that displacement, then it is still okay. NQ, which candle created sequential SMT? Remember, we don't care about any of these candles. We only care about this candle. In this case, it did close bullish, so we use the most recent bearish candle to our left, which is right there. Closure above occurs at 1955. Entry at the retest of the tCISD, stop on the sequential SMT low, and then run it up to your TP, wherever that may be. Okay, again, immediately after, why do we get the move lower? Sequential SMT again here. This is actually, is this a different type of sequential SMT, which you guys don't know yet? Maybe actually, hold up, let me see. Yes, it is. So we'll not go over that example for now because we'll save that for a sequential SMT part 2 video. But just know there was a special type of sequential SMT there. The candle that created it, tCISD. Remember, you can enter off that first gap below the tCISD. Entry, entry, entry. Bit of a larger stop. You know, you don't always have to place it on the invalidation, but it's best to do so. That way, you know, your trade can still have that room to breathe. And if it goes above the stop loss, then you know it's invalid anyway. Beautiful. I mean, just insane move lower, right? And also what I said earlier about how I identify my bias for the day and only look for sequential SMTs and tCISDs in line with that, you know, this is the reason why. Because if price is bullish, it's literally not going to respect any bearish PD raise. You know, obviously the tCISD isn't some special PD rate that works 100% of the time. It's like anything else. Like gaps are going to get inversed, order blocks are going to fail, inversions are going to fail if you're not trading in line with the higher time frame, which we're going to be doing a bootcamp episode on narrative and, you know, reading price action soon. But we're just going over the basic concepts first and then we'll tie them all together. So you can see a bearish one here. I mean, it still gives a move lower. Like this is still a move lower, right? Entry at the tCISD, stop on the SMT high. I mean, it still offers 2 RR, right? You could, if you really want to, trade every single one of them and go for like a 1-to-1 RR. It'd still probably be profitable. But remember, like anything else within trading, if you trade it in line with the higher time frame order flow, it's going to be so much more effective. Again, bearish one here, it forms and then just immediately fails. But then the bullish one forms and then immediately works right after, right? So this is why it's super important. Now, let me show you guys how you can actually spot an invalidation of a tCISD, because once one forms, it isn't just, you know, there forever. It can get invalidated. So like this one that actually occurred a few days ago, or yesterday, should I say. So sequential SMT had taken place here. Then you can see it got invalidated and the sequential SMT disappeared. It's not there anymore, right? And this is why tCISDs are super important, because if tCISDs get disrespected, it often means the sequential SMT is going to fail. So we did have a sequential SMT here, right? This candle created it at 9:35. This candle closed bearish. So where's our tCISD candle? The most recent bullish one to our left, right here at 9:30, right? So mark out the open of that candle. As you can see, price immediately closed below it. So that can happen as well if a sequential SMT takes place. And for example, in a bearish sequential SMT, it closes bearish. It can immediately close below the bullish candle and just confirm it straight away. So sequential SMT and tCISD in the same candle, which is what happened here. Price then retested it at 9:40, which again, don't get me wrong, like it still did give a small move lower. Like this was what, like just about one RR, something like that. Obviously, you know, not one that you would have taken, but as you can see, it gave a small move lower. But now you're probably wondering, how do we know if a tCISD gets disrespected? Well, instead of marking out the open to confirm it with a closure below, price disrespecting the tCISD would be price closing above the closure of it, okay? So think of the whole body as the tCISD. Think of it as a gap. Price trades into the gap, right? Respecting it. If price goes above the tCISD candle, think of it as a gap, then this is price disrespecting the tCISD, okay? So a closure above the closure or below the closure, if bearish, in a bearish, bullish example, sorry, is price disrespecting the tCISD. And often when that happens, it leads to the sequential SMT failing. Not always, it can get disrespected and then reconfirmed, and then you can take an entry. I wouldn't, if price disrespected tCISD more than 2 times, I would just leave that trade alone. If it confirms it, then disrespects it and then confirms it again, fair enough, you know, 2 times isn't too bad. But if you see it get disrespected one last time, so 3 times, then just stay away, okay? Just stay away. So as you can see, price closes above the closure of the tCISD body right there, and then just immediately disrespects the sequential SMT. Because think of it as a PD rate, you want to see it get respected if you are in the correct alignment with price, basically, okay? Like it should respect the bearish PD rates, the bearish tCISDs if we are bearish. You can see it failed, a bullish one then formed, and because this one failed, this shows us that price obviously isn't bearish yet, so then we can continue looking for longs essentially. So tCISDs can also show strength and weakness. Now, what do I mean by this? Let me find a good example here. All right, guys, I know exactly what we can do. Let's just go ahead and zoom all the way out, and we'll stick it in replay mode over here. Random spot, okay? Let me show you guys how you would look at the strength and weakness and tCISDs as they're forming, okay? So as you can see, we've actually got a sequential SMT right here between Q1 and Q2. So as you can see, NQ ran below, Q1's low, and I'm guessing it was YM that failed. Yep, as you can see, YM has not ran below, Q1's low right there. So which candle ran below the previous quarter low initially? 810 candle. So what we're going to then do is go ahead and mark out the open, okay? So what I mean now, you know, when I mentioned the strength and weakness is, like I was mentioned earlier, tCISDs are like PD arrays, okay? If it gets respected, you want it to go higher. If you get disrespected, you know, it may continue going lower, but you want to see them being respected if you're in the correct alignment with price. So, excuse me. So in this case, we have a bullish sequential SMT. Obviously, we've, you know, not checked the higher time frame right now, but this is just a little example. So what we'd want to see is obviously this sequential SMT hold, and in this case, we'd want to see the tCISD form. So a closure above it to confirm this, and then we can be very, very likely that we're going to like run these highs over here, okay? Or, you know, push towards some sort of buy side liquidity. So our first step is sequential SMT. Then we wait for a closure above that candle that creates sequential SMT. But the way we measure strength is if it forms, then that's showing strength, right? If it's showing weakness, what price will do is actually wick above the body, the open of the tCISD, where we expect price to close above, and it'll fail to close above it essentially, okay? So it'll fail to create the tCISD, therefore showing us that price isn't ready to turn around and will most likely continue back lower. So let's put it in just 1x actually to see the candles form one by one basically. Okay, so we've got 1 wick above, 2 wicks above. So already this isn't a good sign, by the way. This isn't a good sign. Also, a thing to note is when you're looking at NQ, ES, and YM, if NQ or ES confirms its tCISD, you can still enter, for example, if NQ hasn't yet and ES has, you can enter on NQ. If NQ has confirmed it and ES hasn't, you can enter on ES. However, if YM confirms the tCISD candle, in which case here it already has, I personally don't like to trust that, because YM is like it's still very correlated, but it's the least correlated out of the 3, and it can sometimes do its own thing, right? So just a little tip there for you guys to keep in mind. So already this is very bearish. I would, you know, if we don't get a closure above here and we wick above it one last time, I would expect that we'd still continue going lower personally if we get one more wick above. But if we close above now, then I would want to see these highs up here get ran. Okay, so as you can see, I'm seeing weakness within this asset at the moment. So if I really don't see this, you know, confirm pretty soon, then I'm probably not going to be looking to take my long position, you know. So let's go ahead and see. Okay, so we got another decent closure. Again, another wick above. This is really not good, but at least the candles aren't closing bearish. So you don't need to rule it out immediately. Just keep in mind that you don't want to be entering until it is confirmed, because this is still very much so bearish. Okay, now it's been confirmed. Now we wick into it, as you can see right here. Entry will be at the tCISD, stop on the low, and then we can just go ahead and target the buy side liquidity, okay? So as you can see, price was showing weakness this whole entire time. Now it's showing strength because the tCISD has been confirmed. So now let's go ahead and see if this would actually play out or if it's going to get disrespected. Okay, as you can see, we actually formed a bearish 90-minute sequential SMT now. So not only was we showing weakness for a very long time, we just formed a bearish 90. The candle that created it was this one here, 9 a.m. So this bearish candle here. Look to our left for the most recent bullish one. Is it this one? No. Is it this one? No. Is it this one? Yes. Okay. So let me move this out of the way. So this one here, you would go ahead and mark out the open of this one here. So like this. Ignore the indicator. I think I've got a filter on there. So it would be this very specific candle. Price closes below it, 855. We're currently inside of it now. So if we dropped lower and disrespect this bullish tCISD, with a closure below here, I would definitely expect lower, okay? So let's go ahead and see. Okay, nice, very nice candle. So now looking at this, you can see we've disrespected the bearish tCISD. So this bearish tCISD candle was here. Remember, we closed below it to confirm it. We closed above the closure of it right there at 910. So this is showing super strength within NQ right now. So I would really expect price to trade towards these highs now. That would be the most ideal situation. Boom, there we go. Okay, as you can see, very nice. So can you guys sort of see how I was navigating price action using the tCISDs? You can literally just use them alone to see strength and weakness, right? So just keep in mind, bearish one formed, disrespected it. Is that bearish? No, very bullish. Bullish one was trying to form. It was failing to form, which means price wasn't ready to go higher yet. But then, as soon as it was confirmed at 845, what did price do? retrace back into it and give us that move that we wanted. Okay, so that's my very exact point. You don't want to be taking the trades if you can see price isn't respecting the tCISDs or forming them. Once they are formed, then you can be, okay, very confident. Let me go ahead and take this trade now. Okay, and as you can see, even here, just another bullish one formed last second, closure above, and then off we go. Boom. Okay, so super simple. No cherry picked example. That is literally how I basically work around all the tCISDs every single day, pretty much, right? That, and then zoom out to the high time frame alignment. Am I in line with the high time frame? If yes, look for the tCISDs to be respected or disrespected. If I'm bullish, look for the bearish ones to be disrespected. If I'm bullish, look for the bullish ones to be respected. We don't want to be seeing all this wicking stuff over here. We want to see a nice clean closure through it pretty much as fast as possible, and then off price goes. Okay, so yeah, hopefully that was a useful example for you guys right there. So yeah, that's going to go ahead and wrap it up for this video, guys. Hopefully you did find it useful. The tCISD, one of my favorite concepts, the one that I have founded as well. Been using it for quite some time now. A lot of people out there are already using it as well. So if you found this video useful, you took something away from it, I'd appreciate all support on the video. Leave a like, drop a comment down below, subscribe, and don't forget to check out my premium membership group, link below in the description, my one-to-one mentorship, both the indicators, and also I've dropped my own AI trading journal called Oracle X. I will link that down below in the description as well. And for the rest of this month, until October is finished, you can use the promo code LAUNCH to get yourself 25% off for lifetime payments for the AI trading journal. Going to make a video on that as well at some time in the future, showcasing it. But with that being said, hopefully you guys found this bootcamp episode useful, and I'll see you all in the next one. Peace.